To fix or not to fix? That is the question that all customers, energy customers in the UK face as their energy tariffs mature, and like mine is nearly at the end of December, and I'm already getting loads of emails from EDF trying to get me to fix. Well, you want to be careful of automatically, fixing as you would normally do, because the rates they're trying to get you to fix at are rip-off rates. It's not just EDF, it's across the board, as this video illustrates. Look, £3,000, that's more than double my what I'm expecting to pay under the current tariff. So they're eager to get me to fix now. Look, where does it say you have, look, the warning that in April 2022 the tariffs are all gonna rise. Well, this is over 100% hike on my current tariff. Fixed rates until 30th November 2023. What's that? That's 2-year fix then, isn't it? If you're happy to move to fix it, then you're all done. You can move straight away. Yeah, they get, like within 14 days of your existing tariff expiry, they want you to shift to the new one. Yeah, but I'm going to be paying double. So there it is, 49 days in fact for fixed total service. The exit fee is one, but it's free if you leave in 49 days before the tariff ends. So that's what the current position is. Right, then let's compare this tariff to my existing. Oh, look at that. So this one that they're offering, which is the best one apparently, 2-year fix. Standing charge 26.92 pence, and what's my current 24.84. So what's that? That's at 8%, I think. Is it? Let's just work it out. 8%. Let me just do this. I think it's 8% divided by, yep, 8.7% increase. That's not much, but look at this day rate, 33.91 pence. Guess what my current rate is? 17.08 pence. That is a whopping 200% increase. It's 100%, isn't it? Let me just work it out. Yeah. So the new rate, 33.91 divided by 17.8 is 198%. So it is virtually double my current rate, whereas this one, 23.08, is 35% increase on the variable. So clearly here it pays to stick to variable on the day rate. Is a huge 100% hike. What about the night rate? 14.93. What's my current rate? 9.29. So what's that? Let me just work it out. 60%. Is that correct? Let me know. That's a 60% hike, even on the night rate. Whilst for the variable, it's a 42% hike. So there you have it. They want you to fix now before your tariff, your existing tariff matures, because they charge you double. If I move now to the November 23 fix, this is going to be same for everyone out there. You're not going to be able to find any tariffs to move to, so you're going to be with your existing supplier, and they're basically asking you to shift to tariffs that charge double, which is what this is now. Yeah, what's the amount? £3,000. What's my current estimate? Is 1,500. So this is more than double they're charging. Whilst the variable 2,200, so that's still a substantial hike, but look at it's half the hike. So this is up 700. That's up 1500, 1600. Folks, if you're thinking of fixing, don't do it. You're better off with the variable rate, because the variable rate is capped. That's the problem they've got now. So all the energy providers, yeah. And remember, this is just for electricity. For gas, it's even worse. What they're offering is even worse for the gas suppliers because of the gas hikes. You know, this is just EDF electricity, just one fuel. You know, my gas is with Zog, which is thankfully fixed until late April. Unless they go bust, then I'm screwed there. So with gas, I'm okay. But electricity, it ends at the end of December. So the message I'm sending to all of you out there is, number one, if you wait till your tariff matures and let it go onto the standard rate, because you are going to get screwed royally. And if you make the big mistake of, you know, fixing to a fixed rate before your tariff ends, then you're just throwing money away, because this tariff is twice my current, you know, tariff. So if I fix now, fix one click, yeah, one click fix, one click screwed, more like it, fixing one click. What'll happen is that my bill for the next, was it 5-6 weeks, will be double. You know, they'll charge me double than what I'm paying now. So if you're thinking of what to do because your fixed rate is coming up, do not fix. Just let it go to the standard rate, because that is less than the fixed rate. Obviously, if they are by some miracle they're offering you a fix that's less than the standard, then go for that. But I doubt it very much, because look, you can see here EDF, they're all the same. Basically, this is regulated, this is not. They can rip you off with this. So they're stuck. So they're basically, well, they're running at a loss on my existing tab. That's why I'm getting so many emails from EDF. You know, listen, I'm getting one every few days prompting me, oh, shift, because I'm paying half what they want to charge me. So I'm just going to let this, you know, roll over to the standard rate. Yes, it's an increase of about, what, 35%, something like that. What, 50% increase, isn't it, overall? Let's do the sum. 2260 divided by 1500. Yes, 50% increase. Better to have a 50% increase than, well, 110%. Yes, so yeah, our electric bill is quite high, £1,500 per year. That's just electric, not gas. Gas is another, what, 1,000 probably in that region. Why is our electric bill so high? Because, well, we got a lot of computers. Oh yeah, and a few mining as well, GPU mining. So, you know, our electricity is actually free at the moment, because yeah, it is. We make about £1,500 in GPU mining. You know, earnings, something like that, 1,500, and that basically pays for our electricity, because, you know, £1,500 electric, £1,500 from GPU mining, so free. At least 1,500. Yes, at least something like, I can't remember. It's about roughly our electric bill is covered by our GPU activity, just across 2 computers. Only mine on 2. So you might want to consider that if you want to beat the electric bill. But you need a good GPU, something like an RTX 3000 series card. That's not limited, because the newer cards they're selling are LHR limited. That means you can't make as much money, but there's ways around it. You have to be technically savvy for that. Anyway, I'm getting sidetracked now. If your electric tariff is maturing, do not fix, because you're going to get ripped off. Let it go onto the standard variable rate, because there's a huge difference. Normally these should be comparable. You know, what's the point of fixing if you're going to charge nearly £1,000 more to fix? Am I going to be that stupid? I'm going to fix. Yeah, in April they're going to be an increase, but it's not going to be that much. Now 16, 17. Now I'm not spending. I'm spending about 1,500. So maybe they're overestimating slightly on this. It's about, according to my estimates, around 1,550 I spend. So anyway, it's a 100% hike on the fix and a 50% hike on the variable. So I'm going to let it roll over to the variable. And actually, I don't really pay anything for our electric because we earn from 2 GPU. I would love to do more, especially in winter. You get free heating as well. But the GPUs are ridiculously priced if you go onto eBay. Yeah, let's have a look. Let's search. RTX 3080. I don't want a limited one. That's not too bad. £800. You can get that back in a year. Ah, parts only. It doesn't even work. Nah, that might be limited. Is it that? £1,000 for. Yeah, you could. What it is, you could get these yeah, you pay £1,100 and you could basically get £1,000 back in a year before take off £300 for electric. So maybe £700 you get back. So you spend £1,100, you get £700 profit back. So it's still worth doing, but obviously you're gonna have to make sure that the car works and not get an LHR one because they're gonna be a pain. You want to get something that's not limited. Founder editions are not limited, but you know they've been out for over a year now. So someone's mining on them. They're gonna have degraded the silicon. That's the problem. You know, it's best to have bought them when if you can get them new from a supplier. That's best, but they're out of stock because everybody's GPU mining. That's why I only got two. I've got one RTX 3080 and an older 2080, and I'm GPU mining with them on 2 desktops. In the background, so they're earning about £1,400, £1,500, so roughly covering the electric bill. So anyway, that's one tip. Okay, now where's the tire? Here we are. So now you know what to do with your tariff, which is to not fix it when it matures. When you come to the end of your tariff, roll over to standard variable. That buys you time for the market, the gas market, to moderate into mid-year to the summer. Then you can look at fixing. Then I'm sure the prices will moderate. Even if they don't moderate, you're going to be saving in the next 6 months 50%. Say it's still 3,000 by say mid-June, and by that time, because these are going to go up in April, and say this is started to go up say in May, yeah, so the next 6 months I would have paid 50% less on my energy bill than if I'd fixed. Yeah, do you understand? So it's not like, oh, if I delay it's still going to go up. No, what about the time period between then and now? I would have saved what's the difference between that? It's about £450. So you'd have saved £450 over the next 6 months. Why are you going to pay them extra £450? Are you that awash with money that you just want to burn it, give it away to EDF and other energy companies? So do not fix. Let it go on standard variable. They can't do anything with a standard variable rate until what, April? That's when I think they mentioned it. Yeah, April 22. yeah, will rise in April 2022. Not now. That's 6 months away. That's when the standard variable rates will rise. And I don't think the fixed rates will be higher, because that is double, the current rate that I'm on. It won't rise. It'll probably be the same or even lower. Watch, I'll do a video update. I bet you the fixed rate for 2-year fix in, say, May, June is lower than that. Whilst the variable rate might be higher slightly. Yeah, it will be higher than that. But this will be lower. So I am just going to let it roll over at the end of December into the standard variable. Say £450, which is the difference between this and this. Definitely I'm not going to fix right now. One click fix, that would be suicidal. Instantly I'm paying double. From 1500 to 3100. So I'll be paying double. Now this way I'm just paying after December. In January, February, March and April, I'll be paying for those 4 months 50% more than I'm currently paying. Whereas if I click this for the next 6 months, I'll be paying 100% more, double. So that's my message. That's obvious now by this analysis. Do not fix, let it roll over, and then see what the market's like in May, June. Revisit it. The variable rate will probably still be lower than this fixed rate that they're trying to get me on. Because the energy cap will rise, but it's not going to rise by double. They're not going to double it, because that's what this would mean. Doubling the current rate. It might rise by 25%, so 2260 times 1.25, something like that. It'd be £2,800. So it'll still be less than this. Still be less than the fix. See, they're stuck. They cannot raise the standard variable due to the energy caps. Yeah, which are only going to go up in April, and even then they won't go up by much. And by then the market might have moderated so that the fixed rates will be lower. That's what I'm going to do anyway. I'll do an update, and you'll see come April, May, June, when there's least, in June there'll definitely be a lot less demand for energy like gas, especially gas. Gas, thankfully I am secure until April. I'm paying peanuts for gas. It would be, it's more than 100. I checked the energy prices, and it was like Zog Energy was trying to charge something like triple the tariff that I'm currently on. I can do a quick look. Let's see what Zog Energy tariffs. Let's have a look what they're charging, and I'll compare it to what I'm on. Let me have a look. Zog. Okay, I'm on 2.5 pence. What's the current? On a what type? Mercury 24. I'm on 2.5. I've got written down here. So let's have a look. It's the that's the standard. What's the fixed? Let's have a look. Zog Mercury 24. What are they charging? Just gonna do like for like. Where is it? Saturn. Alright, let's look at Mercury 12 then. Yorkshire 8 point. Not me now. 8.5 is higher than the last time. I think last time I was around 6.5. So the gas is 3.4 times what I'm currently paying. I'm paying 2.5 pence per kilowatt hour. That's what my current contract is that expires in April. So I'm definitely going to be ignoring any requests to please go. Well, they can't because it's within 49 days anyway. Phew. Look at that. 8.5p. That's 3.5 times. They're getting squeezed badly. That Zog with see, they took the 24 one off, so I can't do it like for like. But it's only got about 6 months left to run. But look at this. What's the variable? Let's have a look what the variable is. That's what I would recommend. If you're on gas, I would similarly recommend that you go on to the variable. Juniper, that's the variable. What's the variable rate? Yorkshire, 3.9. That's reasonable. It's still a massive jump though. 3.98 divided by 2.5. That is 1.6. That's only 60% more. Could live with that, but definitely do not fix. Look, the fix is more than double, 8.5, and the variable is only 3.98. That is a huge difference. Obviously, winter proper has not begun, but if that variable is not going to go up above this, because there's the energy caps. It's not going to go above 8.5. Do not make the mistake. See, gas is even worse than electric. No, electric bills would double with the fix, yeah, and go up by 50% variable. The gas on variable would go up by about 60%, but on the fix it would be 3.5 times. Shocking. So if your gas, gas is even worse than electric. Do not make the mistake of fixing at these ridiculous high rates. Let it roll over to variable and you'll be much, you're going to get an increase, but it's not going to triple. From 2.5, imagine if I went from 2.5 to 8.5, then come and fixed it. It's only a 12-month fix though, and then come say April, May, these are back down to say 4, 4.5, 4, something like that, half. You'll be kicking yourselves. Look at the difference. 4, that's not going to go up much more than that. See, it's being suppressed because of the gas limit. I can't remember what it was before, when I looked, say a month ago, but it's within that range. But I do remember that this was around 6.5. And now look at 8. This is going up because these are the fixes. Yeah. You do not want to fix your gas, definitely. You don't want to fix gas or electric. Let your tariffs as they expire go on to the variable. Trust me, you're going to be much better off. That's what I'm going to do. Luckily my gas, I'll be paying 2.5p until mid-April, unless Zog goes out of business, which hopefully they won't. No, you never know. Look at the difference. I'm paying 2.5 and they want people to pay 8.5. If this was maturing, I would let it roll over to 4. But luckily, like I say, I do GPU mining. Our energy gas consumption is slightly less than it would otherwise be. For instance, in those rooms where those computers are, the central heating is off. But I don't need to have. And in this room where I'm shooting this, where I'm recording this, that's where you can hear the computer, the fan running, because it's not very loud, but you'll be able to hear it. It's because I'm getting 200 watts of extra heating from the GPU on 24/7. So the radiator in this room is off. And what's the temperature reading is 22 degrees. It's quite warm. And there's no other central heating on at this time in the morning because it's around I'm doing this video around 3 AM. There's no other central heating on. Not this time. It's just the GPU minus in the 2 rooms heating. You might want to investigate that again. Anyway, that's my, well, it was supposed to be a quick video. How long is it going to be? Yes. It's not lot longer than I thought it would be. 25 minutes. It's supposed to be a quick video. Anyway, but now you had a comprehensive video of what to do as your tariff matures. Do not make the mistake of fixing. You will regret it. The current tariffs, current fixes are atrocious. Electric double, gas more than triple. Let it go roll over to the variables and you'll pay something like 50 to 60% more. And then come midsummer, then you can look at fixing. When I expect the tariffs will have fixed rates will have moderated, and even if they haven't moderated by some chance, well, you can fix then, and for the 6 months between now and then you'll have paid a lot less, you know, half on gas and half on electric. Look, you get 4p against 8.5p, so you're paying half, because the tariff's not going to increase. So these are variables not going to increase until April, so you're secure. So there's no. And do check out my full analysis that's been first made available to patrons who support my work. Extensive analysis on updated AI stocks, buying levels and more, so that you are well prepared for what's to come. As I hope my patrons are, as I am, because I put my money where my mouth is. What I say, what my analysis suggests, I implement. It said buy Intel below $50, and that's what I did. Triple my holding of Intel. Anyway, my latest analysis includes AI stocks, updated buying levels, as you can see from this list of contents. And do consider becoming a patron. Supporting my work for just $4 per month. I'm underselling myself. After all this inflation, I should inflate the inflation. It should be $50 a month, not $4. And do remember to subscribe to this YouTube channel for new videos as we chart the inflation megatrend in motion, a runaway train. And you got the fools at the Fed saying what? Oh, it's transitory. Oh, there's no real inflation. Oh, it's all. No, you've lost control. You lost control when you started printing money and you have lost. You understand this? The Fed does not control inflation. They have lost. It's like the 70s again. They're just gonna keep saying, "Oh, it's Oh, it'll come down. It's come down. Oh." They'll do that for a decade. That's what they did during the 70s. They didn't know it was gonna fall the way it did. They just kept saying, "Oh, it's gonna fall next. Next 6 months it's gonna take. Oh, it's gonna come down. Oh, it's gonna." 10 years later, they go, "What the hell? We've just spent what's that? A decade." Right, let's ramp up interest rates and kill this inflation monster once and for all, and that's what they did. Yeah, who was it? Greenspan. Was Greenspan this? No, it wasn't. It was Volcker, wasn't it? Yeah, that was it. I'm sure it was Paul Volcker. See, I'm getting old. So that's what they did. We've been talking crap for it. That's what they're doing now. They're talking garbage. 6.2%. Real inflation's double that. Crazy inflation is here, as I've been warning. You can't say you weren't warned. Go back and watch my videos from 18 months ago when they first started printing the money. I was saying, like, buy your. Anyway, you're gonna watch it later because I've got that outro. I've got that bit in every one of my videos towards the end, so you can watch it after this. My strategy during the great crypto bear market of 2021 was to accumulate into a select few cryptos that my research had deemed to be, well, relatively safer. Obviously with cryptos there's no such thing as safe. Anyway, deep discounts to the highs of as much as 80% improves the risk reward ratio somewhat. And the rest of this truly extensive analysis has first been made available to patrons who support my work at just $4 per month. Extensive analysis that includes cryptos that I have deemed to have a high probability of trading to many multiples of their current price most of which still trade at deep discounts, including my price targets or where they could reach during the next crypto mania when the millennials will be FOMOing out of their mouths, foaming. So do consider becoming a patron by supporting my work for just $4 per month, $4, for immediate access to all of my analysis and trend forecasts, including learning material and including my recent analysis on why so-called transitory inflation is likely to be permanent. So batten down those hatches for what is to come. And then there is my extensive analysis of silver, including a trend forecast into mid-2022. Also is extensive analysis on the prospects for the stock market into mid-2022, with my next analysis, soon to be published analysis, updating the buying levels for AI tech stocks, Google's, Amazon's, Facebook's and so on, AMD, TSMC. I better stop there. For instance, Intel hit its buying level of $48 last week, which is what my patrons have been patiently waiting for since Intel was trading high at $65, when I was saying no, don't buy at 65, just buy at the buying levels. That's why I've set the buying levels where they are high probability levels that they should trade down to eventually, and here we are some X months later, $48 buy. And I did what I said I was going to do. I tripled my holding of this quantum AI tech stock, now trading at a dirt cheap P multiple of just 9. I compare that to Amazon on 58, with many more stocks homing in on their buying levels, such as IBM, which I bought splitting into 5 shares of IBM and you get 1 share of Kyndryl. If you value them together, then the current stock price is around $132, whereas it's trading at $126. So you should have bought before the split, because you'll have a net value of $132 to $133 against the market price of around $126. So that's IBM. And don't forget Facebook. We're still buying at $384. Wait for it. $301. That's what it's homing in on. It's not got there yet. It came close, $308 last week. I nearly bought it at $312, but I didn't. But it was close. So do consider becoming a patron by supporting my work for just $4 per month for immediate first access to all of my analysis and trend forecasts. Your mega trends ahead of the curve investing analyst with over 35 years experience. That includes being one of the few who both recognized that the stock market was about to crash in October 1987 and profited from it by shorting the Dow before it crashed. $4 per month is dirt cheap for what you're going to be getting access to, compared to the clowns on YouTube barely out of puberty pumping scams and such like, totally oblivious to the megatrends such as the inflation megatrend and the AI megatrend that I've been banging the drums for since 2015, when you could have picked up the likes of Microsoft for about 1/10 its current price. Then we have the war with China megatrend, which I've been drumming since must be late 2016, something like that. All of these megatrends are where the trends manifest themselves, and all you're usually aware of is like the fluff on top, barely visible fluff on top. That's what most of the commentary is concerned with. You don't even. When did you last hear about the war with China megatrend? I bet you haven't. You heard of AI, but it's a megatrend that's going to run for 20 years. And quantum computing megatrend is part of the AI megatrend. Anyway, do consider becoming a patron by supporting my work for just $4 per month. You're not going to get any better value for money than that. As we defend ourselves, protect ourselves from the rampant money printing inflation by the central banks. Insane money printing as though it's not going to feed through into wage and price inflation. Big inflation is coming, as I've been flagging for, well, over 6 months. It's more like a year now. That's why I was saying last year, if you're thinking of buying big ticket items, do it now before the price hikes, which have transpired. You know, I bought a Culture K7 for £340. Current price on Amazon is, was it £565, and similar for lots of other tech items I bought. For instance, the components in my PC that I ordered in January and got delivered in March was £3,100. Current price of the components is over £4,000. Crazy, the inflation is here, and it is accelerating regardless of what the indices say. So protect yourselves by investing in assets that are leveraged to inflation, and AI tech stocks are leveraged to inflation and are about to get discounted. So do subscribe to my YouTube channel for such analysis, and do consider becoming a patron.